What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 39. It's August the 3rd, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about our important levels that we have on the chart today. So let's start off with yesterday's closing price. Now, that's represented by this orange dotted line up above, and that price is at 35,000 around, I think it's either 394 or 395, one of those. And this level is actually very important, and it'll play a big factor today in a lot of these trades. So we'll get into that a little bit later. And below yesterday's closing price, we have a zone that we established in the pre-market that was actually representative of the highest prices that we actually established for this entire swing leading into the market open. The red line in between was also a level of resistance that was important as well. This zone down below, we drew this based off of pre-market action consolidation. Also, this level of blue down here, this is a support level that eventually became a resistance level, and we established this one in the pre-market. This line right here was support that was drawn based off of market action after the market opened, and this zone down below, we just drew this off of the double bottom. And what's interesting is that this consolidation zone also lines up with a level of support that extends back to the pre-market also. So with that out of the way, let's go ahead and get straight into it and talk about these trades that we made today. So let's start at the left side of the screenshot, where when we came into the market, we were pretty much having a very strong downtrending move up until that time. So as the market opened, we see that move continue down. Now, once we established this one wick and pulled all the way back, I was like, okay, I have a good idea of what we're doing. So since I knew that this was long-term support, which now that we've broken through, it should become resistance. So I shorted right here on trade one. So let's read the notes. I went short here during the downtrend as prices came back to test resistance. I got out early, which ended up being a good decision. Now, this trade did eventually work if I would have held it longer than I wanted to, but let's zoom in and really understand why I say it was a good decision to get out. I say that because this candle looked really good when I shorted it initially on this green candle. But after this candle closed and I saw the candle next to it start to form like it did, it started to look more so like a like a higher low to me. Because if we had a downtrend, we came back down on high volume, established a long tail candle wick, we closed significantly away from the lows of the wick, and then the next candle was a green candle up, and then the candle following had a wick that was not able to push past the opening price for that green candle that came before. To me, it looked like the buyers were kind of taking over right there, and I didn't want to get in the way of that. Now, eventually the trade did work, but based on the things that I saw, I felt like I had to get out, and I think I made the best decision right there, because sometimes in the market, when you see things that tell you to get out, you just got to get out. Don't worry about what happens after or what happened before. Just focus on making the right decision at that time. You can always look back on the market and say, oh man, I could have made more, or I could have did this, but just focus on making the best decision in the moment, and then you live with it. So that was trade number one, and I feel like I made a good decision, and I feel like that actually builds your confidence when you're in the market. When you make the right decision, even though you could have had more, it kind of helps you remember that discipline is very important, and discipline will always get you far. So that's the biggest lesson I took away from trade number one. So after this, we see a higher low form on top of the zone, and then from that point forward, an uptrend started, and we continued to make higher low after higher low. Now, what's interesting is that I was trying to get in on every single last one of these higher lows, but I was putting my orders at literally the best possible prices, but I was unable to get filled on any of those because the market would probably come like maybe 2 to 3 points away from my entry point, but it would never fill me. And in those scenarios, sometimes when you trade long enough, you'll run into a lot of scenarios like that. And it's okay. You just got to live with the results. You wanted to get in, but the market moved without you, and it's okay. The last thing you want to do though is chase the market. And I feel like I did a good job of not trying to just buy at higher prices, expecting for the uptrend to continue, because I was frustrated that I missed entries at lower prices. So good job of staying disciplined within this entire upswing between these double bottoms and the top of the zone right here. Now, when we come back to trades 2 and 3, once I saw the zone start to get respected again, I went long at the zone 2 times on trades 2 and 3, but I didn't hold my trades to their target. And that's what's so interesting about zones. I feel like a zone from a visual perspective looks like one of the easiest chart setups to trade, but a zone is so tricky when you're in the moment and you have so many thoughts about, I see that it's a zone, but how long is the zone gonna last? Is the zone gonna hold up? You have so many doubts in the moment, and as a trader, sometimes that's just what you have to deal with. Doubt will be a part of the process, but you also have to believe in your trades too, because for these two trades, there really wasn't a legit reason for me to cut these trades short, except for just fear based on nothing really concrete. Now, if you have fear based on an actual reason, like I had at trade one, I had fear because I saw that higher low and I was short, so I said, oh no, time to get out. But if there's nothing to validate the fear that you have about staying in a trade, then you just gotta deal with that fear and accept it and just say, look, it is what it is. I'm holding my trade. It's not a reason for me to get out. I'm not going to let my emotions get in the way of my actual logic. So that's what I was going through on trades 2 through 3. Only thing I could say is that my entry was definitely good, because I remember day before yesterday, I was talking about how when it comes to zones, you literally have to have the perfect entry and the perfect exit. Now, on this particular trade, my entry was perfect. I think the lows for the zone were 306. I placed my order at 307 and got filled and had a chance to take it back up. So entry was good, but I got to work on that exit. So 2 and 3, they just came back to break even. Now 4 is where things started getting a little bit questionable in terms of my decision making. And I say that because at 4, I went long at the bottom of the zone again, but my entry was way too late. And I would say that 4 was definitely a little bit of a kind of a revenge trade. I'm not going to lie, because I felt kind of frustrated that 2 and 3 would have worked if I would have held it. So I was like, yeah, if the zone is the zone, then let me continue to go long. But as we move on to trade 5, the reason that didn't work was because I was still viewing the market as a zone, but it was actually a series of lower highs, and the details matter. And I say that because when you trade a 1-minute chart, things can change so quickly, from an uptrend to a downtrend, from a consolidation to a trending market. It doesn't matter. Things change, and they change very quickly. So you got to be able to pay attention to every single detail that's coming into the market. So that way, if you need to make a change on the fly, you can do it based on the information that you're seeing that's coming in. Now, when you get too caught up on one specific setup, you might just start focusing in on that and only looking at that and not paying attention to everything else that's going on. So you never want to get so deep into the forest that all you can see is the trees. You always want to make sure you keep a bird's eye view so you can see what's in front of you, but also see the bigger context. That's very important. So on 4, I just gotta have enough discipline to avoid taking those revenge trades, because they feel so good when you take them, because you look at trades 2 and 3 and say, I missed it, but I'm gonna get it at 4, and you feel really good. But that's more of a temporary feeling of goodness compared to the long-term effects of regret when you look back on your trade review and you say, dang, I knew I shouldn't have took that trade. So that discipline is so important. So then we come back. Yeah, we talked about 5, right? I came back and still did the same thing. So overall, those 2 trades was definitely not my best decisions, but we kept moving on anyway. So then as the market moved down, we come back to trade number 6. So once we broke through the zone, my first initial thought was, okay, we came back down to retest these bodies, but never came back down to test the wicks. So more than likely, if anything, we should pull back up, retest the top of the zone. And if we do, and I see prices start to move away, I'll take the short and look to take it back down to the bottom of the wicks. And that's exactly what was able to happen right there. So that right there was a good trade. So everything else before that, even though it was difficult, trade 6 kind of made me realize, okay, if you're patient enough to make the best decisions, you have a better chance of success. So with that mindset going forward, I was able to take trade 7 next. So after we see prices come back, well, actually, before we even move on from that, I also want to talk about something really important at 6, right where these 2 wicks form. So first thing I want you guys to look at is, let's go back to the, hold on. Okay. So let's look at that first double bottom that formed a little bit earlier. Notice how this double bottom was formed on extreme volume. The first test of the double bottom, this was actually the highest volume candle for the day, and this was actually a higher volume candle than the candle that formed at the open. So anytime you have a candle that has volume that's higher than what happened at 9:30 when the market opened, that tells you that whatever move is happening right there is extremely significant. So you take that volume into context with the overall price action, and then you can kind of get a good idea of what the market is trying to tell you. And right here, once we saw that double bottom off a high volume that led to an uptrend, that was telling us that there were significant buyers at that level. And what's interesting is that when I went back to look at the hourly chart, this was actually a major level of support. So it made sense why this level acted as such a pivotal point in the market where prices reversed from, and they reversed with higher volume. And then when you come back down to trade number 6 at these lows for the swing low right here, notice how once again we had higher volume, and all of that selling momentum that was present from the top of the zone all the way back down completely reversed at these same levels down below right here at the bodies from the last area where it was a large surge of buying. So in my mind, what I assume is that more than likely the same group of people that were buying over here are the same group of traders that are buying over here right now, because it will only make sense. If you were trading the hourly chart and you got the trade the first time it came into that level, let's say they were looking at something like I do where they're looking to trade the support level of the higher low as prices come back into it. So if you're doing that on a bigger time frame, more than likely you're going to take that second trade when it gives you an opportunity on the recess. So that's what we saw at 6, and the volume supported it. Because the thing about volume is that the volume is going to tell you where the most important action in the market is located, because traders that come in with big size and big orders, they can't hide what they're doing. The volume is going to express that, and it's going to show you that, okay, at these price levels, these are where people are trying to go long. So when you use that information, you can kind of get a good feeling as to what the overall market is trying to do. It doesn't always mean that, oh, okay, it was a lot of volume down here, so it's automatically going up. It doesn't always mean that, but it does give you a good indication of what could possibly happen. So let's just keep that in mind, because throughout the rest of the day, that's also going to come into play, these big buyers down here, but we'll get into that a little bit later. So let's go ahead and move back on to trade number 7. So for trade 7, let's see where the notes. I went long here as prices came back to retest the support level of the higher low. And I did that because once we formed this level at 6, that was to me a double bottom. And then you come back at 7 and establish the higher low coming out of a double bottom. So anytime I see that, I automatically think long trades. I wait for prices to come back into support, and then I go long and take it back up to either my profit target or the next best level above. So in this scenario, I just took it right back up to what used to be support, but was now acting as resistance, and I got out right there. So then we see prices come back, create another higher low, come back, hit the bear trend line once again, and from that point forward, we had a strong sell-off all the way back down, almost to that same level where 6 occurred. But notice how once we got back down to that same area where all of the buying and the volume came in from previously, we once again found support down there. And look at what happened. We found support on higher volume. So what's that telling us? That's telling us that whatever group of traders were present before are still the same group of traders that are going long right now. So that's telling us that the uptrend definitely does have some momentum. Now, some of these things that I'm telling you, I realized like half of it during the market, but only as the market started to progress. I didn't really have enough information to make a complete picture of the entire story when this actual price action was happening. And that's actually what led me to taking the short trades at 8 and 9. So let's read the notes. I shorted here and expected the bear trend line to hold. But the thing is, I was really unsure about this trade, because when it comes to bear trend lines, you want to use a bear trend line in a much more like obvious and pronounced downtrend where everybody that looks at the chart is automatically like, oh, downtrend. But if you look at a chart and you say, oh, downtrend, but wait, there are definitely some signals where you could say it's an uptrend too, then in those scenarios, you want to wait for more clarity before you jump on either side. Because In that case, the market could really go either way. And that's what I learned right here. So if you're unsure about a trade, just skip it. It's going to be plenty of opportunity in the market. So you don't have to just jump at something that you're unsure about. You can wait for your best setups, and then when they come, you can do your thing. So on 8 and 9, on trade 8, I actually took a break even loss, but on trade 9, I came back and did the same thing. Actually had to take a full stop loss. So when you're unsure, just skip it. That's the lesson right there. So then as we move on, we see prices move back up. Well, really this area at 89 was a higher low, which makes sense, and it adds to the overall story that we were talking about, starting from this double bottom down here where we had the volume come in. So we had a higher low, pushed up, retested what used to be support but is now acting as resistance. So once I saw that, I'm like, oh, okay, the uptrend is back on. I'm gonna wait for prices to come back down into support, and then I'll go long. And that's what I was able to do at trade 10, and just took it back up to resistance one more time. Just getting in, getting out, locking in my profits, doing my thing. So what's interesting again is that look at what happened right here with this little wick that occurred once we hit the top of the resistance level. This right here was a strong sell-off to the downside, but immediately got bought up by whoever in the market was trying to go long. Now, remember what I told you about all of these other points that we saw where we saw volume coming in and we saw higher lows being created and higher lows being created. Once again, all of those buyers came in on high volume and was able to still keep the market trend going. So we had so many attempts and so many chances for the sellers to step in and push the market down. We had a bear trend line that got broken. We had a sharp move to the downside. Just think about it. At one point in time, this candle was completely red. So that was a very strong selling signal. So if it was sellers that really wanted to push the market down, they would have came in and they would have did so. But when that candle ended up being a long tail candle wick that actually closed positive, it closed positive barely by a couple of points, but still, for it to come from all the way down here and close in the green, that's a very bullish sign. And that only supports the overall picture that we've kind of been looking at so far. So that's very important. And it's not the last time that this is going to happen either. Whatever buyers or group of buyers that were here were still doing the same thing a little bit later on. So we'll talk about that real soon. So after we had that long tail candle wick, we see the momentum just continue. All green candles all the way back up to test what used to be the resistance level for this overall trading range. Then after that, we created a higher low. One more time, actually, we created another one. And then I used that level as my reference point to go long from. And that's what brought me to trade number 11. So I just looked to go long here as prices came back to retest the support level of the higher low. Then I just took it back up to the next level of resistance a little bit higher up. So after we pulled back, we created another higher low. So that just confirms that the uptrend is definitely as strong as we thought it was. Now on trades 12 and 13, I had a good idea, right? Because I was going long right here, aiming for yesterday's closing price. Remember, yesterday's closing price is this orange line up here at the top of the chart. So I'm like, oh, okay, I see that the trend is up. We had a big, huge candle to the upside that came to test resistance. So right here, I just got FOMO, fear of missing out, because I saw the big, large candle and I thought that, oh, okay, it's not going to be a pullback. They just going to run straight up to that level. But like 8 times out of, well, not even 8, 7.5 out of 10 times in the market is not just going to shoot straight up to a level. Even though it looks like it, you cannot give into that temptation. This candle right here was definitely a candle to fake out all of the buyers that thought that prices were going there, but weren't patient enough to wait for it like I was in this scenario. And then if you add that into the fact that I was buying at, this red line was the highest price for not the day, but the highest price for like the past 5 hours. So that's very significant. So for me to go long right there, that's just not a good decision at all. So my idea was right here on 12 and 13, but the timing was definitely off, because imagine what would have happened if I bought at lower prices. Because if this was the previous higher low, I should be going long as prices come back to retest that level of support. So instead of going long at the top of resistance, I could go long down here, and I would have been able to at least take it up to resistance. And if I wanted to get out, I could have. Worst case scenario, it would have came back to break even, which would have allowed me to avoid the losses on trade 12 and 13. So that's why it's so important to buy from the best prices, because you could be right about your idea but still get the trade wrong. So that's the biggest lesson I took away from 12 and 13. So then eventually we did come back like we should have to retest that support level of the higher low. So as soon as I saw prices retest that level and start moving away, that's where I went long at 14. So that was a great entry by me. Just I recognized what was going on. I realized that my entries from before were a little bit too early and a little bit too high. So I waited, bought at lower prices, and had a good entry. Only thing was, I let this trade come back to break even. And that's a travesty because I got a little bit greedy. I'm not going to lie. Because prices came all the way back up to, I think this was 387. I remember it because I saw it and I was like, I could get out at 87, but my take profit is at 90. Why wouldn't I just hold out for those last 3 points, right? And it's such a captivating idea because in your head you're saying it's only 3 points, but you got to take into consideration price action. We already had a strong candle that pushed us into the top of the zone, and then we had a strong candle that pushed us out of the zone. Now, usually what I like to do is sell into strength. So whenever I see a candle at its highs for that time period, I just like to get out at the highs of the candle because that's the best possible level that you could get out at that specific time period based on all the information that you have. The candle might keep going up. It could, but you don't know that at that point in time. All that you know is that the candle is at its highs right now. So if that's the case, more than likely you should just take profit, because once you get a big, large momentum candle to the upside, usually you get a pullback either immediately after or not too long after. So on 14, I just dropped the ball. And if you read the notes, it says, went long here at the correct levels, but I let a 35-point trade come back to break even. Dang. But I definitely learned my lesson. The lesson is stop being greedy. The trade was where it was. Now, here's what I could have done better in that scenario. Like, let's say I do want to aim for a level that's further out, and I'm like, I feel like it could get there. What I should do is trail my stop. I have a bad habit of leaving my stop at break even when I have a trade that's running like that. But what I should do is just lock in that profit step by step and keep moving that trailing stop higher as the market goes in my favor. So then if a pullback does happen, my trailing stop will get me out, and I might not get the best results from the trade, but I'll still get a decent result where I feel like I'm satisfied with the work that I put in. So 14 break even trade, super frustrating, but I didn't let it get to me. I was like, look, I understand what's going on, and I've seen this scenario before where prices try and come back up and test a major level. They can't do it the first time, so they pull back, they reset, and then they get ready to do it that second time, which was actually what we saw a little bit earlier on the downside when we were waiting for those prices to come back down and test those wicks. When I took trade, what trade was that? Hold on, let's go back. When I took trade 1, well, excuse me, when I, hold on, which one was it? When I took trade 6, remember that concept we were talking about where I said we pushed into the zone but didn't come back to test the extremes. The market reset and then got ready to make that move, and then I caught that trade. So because that already happened before on this previous session, that kind of gives you an indication that it's not guaranteed to happen again, but the probabilities are definitely higher because the same traders that happened to before are the same traders in the market now. So that was the mindset I had going into trade 15. I'm like, look, I got a good feeling we're coming back to that yesterday's closing price, but I just got to wait for the right opportunity, and I don't want to get in too early. So at 15, as prices came back to test support, I went long right here, which in any other scenario would be a good idea. But you got to remember that even when you're in an uptrend, there will be pullbacks. Now in the pullback, you don't just want to buy at a random level of support because you just feel as though prices should bounce from there. You want to always respect the downtrend or the downswing, even though you might be in an uptrend. And you want to wait for the selling to subside and then you want to see that first higher low get created, and then you can get back to being as aggressive as you want to be on the long side, and you can go long to your heart's desire. So you always got to wait. That's the only thing. You know what's about to happen, but you just got to be patient enough to let it form, let it set up, and then do your thing. So that's what I learned on 15. Just, yeah, you got the right idea, but wait for that first higher low. So then we come back on 16, and that's when that first higher low got established, and that's when I took my trade. So I went long after the first higher low after a pullback, and then I held this trade back up to yesterday's closing price. Not exactly to the closing price, because this wick from earlier, it kind of intimidated me, and I was like, if we stopped at the wick earlier in the session, who am I to try and say that it's gonna go past it? Because if I was being greedy before, wouldn't I still be being greedy if I had the trade opportunity again and I still didn't take profit? So I'm like, look, even though I feel like it's really going to YCP, I'm just gonna take profit right here, because this was a fantastic trade. I made a lot more than I usually do on my scalp target. So I said, you know what? Let me lock that in. So I was able to make back a lot of these losses that I took on 12, 13, and 15. So then we hit yesterday's closing price, had a little pullback back down to the bottom of the zone, created a higher low on top of the zone after we broke out of it. So that right there is a successful breakout. So then we pushed up, we pushed higher until we created this swing high, and then we pulled back and created a higher low. So whenever I'm in an uptrend like this and I see a move where we have a spike to the upside, usually you can look for a period of consolidation after that. It's very common. It's actually called a flag pattern, but it's different variations of it. I just like to call it a spike in consolidation, because flags kind of confuse me a little bit based on the textbook version of it, but that's another topic for another day. But anyway, drew the zone based on the swing high and the first higher low, and I use that as a reference point for my entries. Now on trade 17, I did go long at the bottom of the zone, and I was able to take profits, take prices back up to the top of the zone where I took profit. So from the naked eye, that might look like a good trade, because you say, oh, you went long at the bottom of the zone in an uptrend and took it to the top, but not quite. And let's break it down as to why that's not the best possible entry for me, because once we were trading inside of this zone, I had multiple opportunities to go long. I think I boxed the zone up after we created this one green candle right here that kind of broke out of that zone. So I was like, oh, okay, it was a zone before that. We had a slight breakout, so let me box it up. So once I boxed it up, the next candle that gave me an opportunity to get in was this red candle right here. Notice how this red candle came all the way back down. It tested the bottom of the zone, and then the next candle after that opened at the top of the zone. So if I would have went long right here on that first entry, I would have been able to take profits at the top, and I would have been good. Now I took profit, I went long at the second opportunity to get into this setup, which, like I always tell you, the second opportunity is just not as lucrative as the first. Now on this one, I got lucky because my stop didn't get hit. My stop was 10 points below, and the market ran down 9 points and then immediately reversed. So on this occasion, I definitely got lucky, but I think 9 times out of 10, I would definitely get stopped out by taking that entry like that. And that's why I always say that second opportunity, if you see it and you feel obligated to take it, just skip that trade, avoid it. If you can't catch it the first time, you just missed it. It's okay. You don't have to chase it. You can wait for the next best opportunity in the market, and then you can do your thing when you get that opportunity. But don't run around chasing the market, because just because you have a good trade doesn't mean, well, just because you have a good profit doesn't mean that you made a good trade. And I think that's what the notes say. So I went long the bottom of the zone on 17. And a profitable trade doesn't mean that the trade was good. And that's the biggest thing I learned from trade 17. Now after that, I decided to call it a day, because I felt like the market gave me a break on 17 and was like, Ty, I could get you, but I'm gonna let you slide today. And I took that lesson and I said, you know what, based on that, I'm gonna just go ahead and get up out of here. So I called it a day after that, before I could make any more bad decisions, because I feel like throughout the day, I did decent. I started off shaky. 2 and 3, they kind of hurt my confidence a little bit. So did 4 and 5, but I bounced back on 6 through 17. I pretty much did my thing, but I would say overall, I just feel like I'm kind of in the middle right now as a trader. I'm not making just terrible decisions, but I'm not making the best possible decisions that I can. And when I do make the best possible decisions that I can, I kind of take some trades in between that really are unnecessary, and they just eat into the gains that I already had, because I'm taking small losses here and there, just trying stuff that I don't need to be trying. So I would say that's the biggest thing I'm trying to focus on right now, which is taking the great trades that I take. Yes, like trade 11, trade 14, trade 16. Like those were some really, really good entries. Trade 7, trade 10. Like, good job, Ty. Trade 2, trade 3. Good job. But look at trades 4 and 5, 8 and 9. That's what I'm talking about when I say it's those little small things, those small trades in between my best setups. So that's the main thing I'm focusing on. And I think it comes down to discipline. I have such an excitement when I have profits in the market that I just want to chase behind it and make more and more and more and more. But it's not like that. It's like I don't know, I don't have an analogy, but basically when you have good trades, you got to take a step back, reevaluate. If the market is still looking good, you get back in it again. But you don't want to take some BS trade that the market offers you in between your best trades. You want to avoid those, and that's the biggest thing I'm working on. So I'm gonna go ahead, call it a day right here. That's all I got. I hope you guys learned a lot, especially when it comes to volume and how that makes a big difference in the market, and how that volume, when you use it the right way and you analyze it in conjunction with price action, can give you a very good indication of where prices want to go. So I hope you guys learned a lot about that, and also learned a lot about not taking lower quality setups in between your best possible trades. That's the lessons that I wanted to stick with you guys today. So I'm gonna go ahead and get out of here. I got a lot of studying to do. Tomorrow is Friday, so I'm looking to come in here, and it's also non-farm payrolls tomorrow. So if you don't know, that's gonna be a very volatile session. I don't know if I want to trade it, honestly. Probably not. But I will be back for the market open tomorrow at 9:30. August 4th tomorrow. So I'll see you then, but until that time, you guys, take it easy.